Morning, everyone. 8:01, so we're gonna go ahead and get started. Thanks for being here today. We're gonna start with some introduction. You want to start us off with you?
My name is Dennis Cohn. I live at Ridgey Creek.
Oh, Commissioner Dare, I heard it was insurance, so I'm here.
Greg Ranker, the Shoots Market Road Firewise Community. Dean Richardson, we're with Operation Rhythm.
Jack Hammond, the Parks HOA, Wildfire Committee.
I'm David Mormon with the American Red Cross.
And Jackie Nurski with Pacific Power. Claudia McDonald, Rimrock West.
Monty Damarel, Newberry Regional Partnership.
Good morning, Gary Marshall, Shoots County Fire District.
Robin Church, Three Pines HOA, Summit West Emergency Preparedness Lead, Project Wildfire Neighborhood Coalition.
Grant Solich, Grantland Management Services.
Lon Laneve with Aubrey Butte, and I'm also co-chair of the Project Wildfire Neighborhood Coalition.
Good morning, Heather Miller, the Oregon State Fire Marshal.
Good morning, Melissa Steele, Ben Fire and Rescue. Audrey Superman, I'm an intern with Ben Fire. Lauren Street, Deschutes County Natural Resource Specialist.
Kyle Collins, Deschutes County Planning.
Kevin Moriarty, Shoots County Forester.
And then we had someone, you want to give
Mary Ann Kramer from Ridgey Creek Townhomes.
Megan's the grower interview experts.
And I'm Corinne Heiner, Natural Resources Specialist for the county as well. So if you are joining us on Zoom today, will you please be sure to put your introduction in the chat for me? Just your name and your affiliation or what HOA or neighborhood that you're with. And today, so let's start with announcement here. Sure. Sharing it on Zoom, but not in the room. Okay, so I'll just show this shared here. So we are Project Wildfire Neighborhood Coalition, which is a subcommittee of Project Wildfire. We are expanding our meeting locations, and we're having a meeting this July in Brine at the Senior Activity Center. The Newberry Regional Partnership is hosting and helping us, coordinate that meeting. It's going to be this Thursday, the 17th, from 2 to 3:30 p.m. We will have some refreshments and just a little kind of an overview of Project Wildfire, the Neighborhood Coalition, how that started. And we have Austin Reimer giving an overview of how to become Firewise. And so if you're interested in joining us, we would love to have you. The Project Wildfire Neighborhood Coalition helps with mentoring and supporting communities in their journey to become Firewise. And we're really growing, so I think it would be great to get down to South County where we really need it. And then
Corinne, it is on Zoom too.
yes, it is also on Zoom. I did send that out last week, but if someone didn't get the link and needs it, just send me an email and I'll make sure that you get it. And then Kevin, did you have?
Yeah, just, on our grants, we've been, doing the reporting for the last fall fuel reduction grants. We're still missing a half dozen reports on that. Lauren has probably reached out to 3 or 4 that at least responded, but we have at least probably 3 that haven't even responded. I just want to emphasize the importance of doing the reporting if you have received grant funding. We really take that into consideration for a future grant. And we also have to use that in our reporting for the larger grant as well. So please, do your reporting if you haven't done so. And when you do the reporting, make sure that you're, putting in a good narrative to tell your story of the work you've done. As far as the bin rental program, that for the most part, it was a great success. We didn't have too many issues with that, just some general stuff. We did come in under budget on that. It was kind of hard to speculate how much money that was gonna cost. But we should be able to fund, I'm anticipating about 40 to 45 communities next year with the bed rental program. So hopefully we can get everyone. You know, we'll save roughly 50 communities, and we haven't got 50 applications yet, but you know, we're growing, so we'll see. But you know, we're gonna try and we anticipate to fund everyone next year for that BEN program. And then also we have the fall fuel reduction grant again coming up this September. So September 1st through September 30th will be the application period. Lauren's gonna be managing that. We're hoping to get it in a new format. It won't really change on the front end what that looks like for folks, but we're trying to put it into Smartsheet to have it a better workflow in our application process. So hopefully we get to that point, and we have the same funding that we had last year, so that'll be $125,000 that we have allocated for that grant program. That's what I got.
I do want to mention to this group to get the word out. I worked on House Bill 3135. It was for actually $5.2 million worth of juniper removal in 7 counties, of which Deschutes County was allocated $585,000. Now, the good news is it is juniper removal. The bad news is they put in ORS about 100 acres. And so I am talking to Soils and Water, and I'm saying we have over 21,000 properties in Deschutes that are high risk, and I know a lot of those people have junipers. So I'm telling people that live in that area to put 100 acres together in their neighborhood. You know, out by Pryor, there's tons and tons of fabulous water sucking flammable juniper, and so that's what they're working on. Hopefully, that money will be available sooner rather than later, but it is for juniper removal. If you have any friends that live out where they're on 5 acres and they can talk to all their neighbors and consolidate. I'm praying that Todd Peplin, who's returning from a lifetime trip this week, will be able to, you know, help our community on a larger scale than just those 100-acre pieces. So it's, yeah, House Bill 3135.
That did pass, right?
It did pass. It went through the juniper bill was in the Christmas tree funding.
Yeah.
Of course it was. And like Crook County, I heard the fire on Sunday, Saturday afternoon. Those were junipers exploding. The neighbors were hearing.
Yeah.
So, you know, critical to really attack our juniper.
Yeah, so like Commissioner Adair was saying, the Southern Deschutes Water Conservation District would receive that funding. And Todd Peplin, so please reach out to him if you have, you know, concerns about juniper or have a good juniper project.
Sorry, who is Todd with?
He's with the Southern Deschutes Water Conservation District, and he's the
I
project
have a
planner.
cell phone number if you want it.
You said it was 100 parcel minimum
Well, 100 acres.
or 100 acres, sorry.
Yeah,
that's
it
what I
was
meant.
that, they took that from old legislation,
Yeah.
and I'm like, why did you do that? Because that made that so difficult.
Yeah.
So I'm good at begging, and I just said, you've gotta put it to, it really makes a difference, put it together, and, you know, the other end of where I live, you know, they're on like 5 acres, and they're working with all their neighbors.
Oh, they're saying it had to be 100-acre minimum
Right,
parcel to treat.
yes, it was the
Yeah,
ORS
that's-
that it cited. And
Do they
I'm
all have
like,
to be like within the same spot? They can't be like 5 here, 5 here.
Yeah.
well, I'm praying that they can,
They could just be 100.
Yeah.
5.
continuous.
Yeah.
That's what I'm saying, like they.
Did you lock it?
No, we didn't. No.
Okay. Did you have it?
Yeah, I just wanted to mention a couple of things, because I think our last meeting was in May, so we
Yeah.
had the Juniper Ridge Fuels Reduction Project, that was a 79-acre fuels break, that has been completed and was completed in June. We did get a notice on one of the federal applications that we put in for the Community Wildfire Defense Grant. We were hoping to hear back about that this summer, but we just found out that it'll most likely be late fall. And that is putting emphasis on fuels reduction in the Alpine area. And yeah, most of our fuels reduction projects have been wrapped up that were going on this spring. We have one more that we're wrapping up right now. So. That's everything.
All right, and then for some reason, Christina, just so you know, you're not muted. And it's not letting me mute you, for some reason, usually it does.
It's just dropping out.
Oh. I'll let it- Wait, there we go, Now, okay, got it. All right, thank you for the announcement. So today, we have Kenton Brine from the Northwest Insurance Institute. It's probably going to be a pretty robust discussion after his presentation. So please, either raise your hand online if you have a question and in the room as well, so that we can try to be diligent about making sure everyone gets their questions answered, but also fair and be kind of quick if you can. So anyways, Kenton, if you're ready, I'm gonna hand it over to you. Go. It's not letting you unmute.
There we go. Good morning, everyone. First, can everyone hear me all right?
Yeah.
Great. Thank you all so much for inviting me to join you this morning. I apologize that I can't be there in person, but I have another meeting immediately after this one in Olympia, Washington, to talk about the same subject. It's obviously a timely matter. And looking around Central Oregon as well as Southern Oregon, obviously a lot of fires active at the moment. Over the past year or so, I've become a lot more familiar with wildfire in Oregon and the community level efforts to become more resilient and the work that you're all doing. And so I think I'd like to begin by thanking you for the work that you do in your communities. You know, whether this is an insurance related discussion or just a discussion about how to protect your own homes and those of your neighbors and friends and loved ones, that community level work is going to be increasingly important as we look at not only the stability of the insurance market, but just simply livability across the Western states, in particular the states I work in, Washington, Oregon, and Idaho. So I'm going to share my screen and I'll begin my presentation. And I want to make sure I share the correct screen. There we go. All right. I assume everyone can see this, and I will start off from here. We're going to talk today about meeting the moment in wildfire risk resilience and property insurance, and I'm pleased to be here with you. My name is Kenton Brine. I serve as president of the Northwest Insurance Council. We're a nonprofit insurance company supported organization. Our mission is to inform the media, consumers, and policymakers about home, auto, and business insurance, or what we call property and casualty, or P&C insurance. We serve consumers in Washington, Oregon, and Idaho, as I mentioned, and our member companies, many of them you've heard of, some you may not have, some are regional, some are one or two state writers, most of them write across the country, including in Oregon, and our members write more than half of all the P&C property and auto insurance policies in force in Oregon today. In today's presentation, I'd like to provide you with some very basic information about how insurance works and try to answer some questions I know you all have on your minds. You've either experienced these difficulties yourself, or you know people who are experiencing these difficulties with the Oregon insurance market. I think I have some messages that are hopeful about where the market is headed and the efforts our industry is undertaking alongside Oregon policymakers to try and improve not only the insurance market, but also livability issues and providing increased and improved protection for consumers in Oregon. We've become a big, more of a partner than I think an outsider for public policy in Oregon, and I think that's been a good development over the past few years. And we'll talk more about that. So I like to start out with some basics about insurance because I don't know exactly how much you all know about how property and casualty insurance works, what it is, how it's priced, and what affects the marketplace. So instead of pretending to be a fire expert or a community organizing expert, I try to be more like an insurance expert. So let's start with some basics. P&C insurance, there's personal lines and commercial lines. It's just what you'd think. Personal lines are homeowners, condo owners, renters, auto, motorcycles, boats, RVs, and then of course, personal liability insurance, which comes with your homeowner's insurance, but you can boost that with an umbrella policy. And on the commercial side, there's just business insurance, business owners property insurance, there's property liability insurance, professional liability, medical malpractice even as part of that. And you've got commercial auto for fleets, trucking, commercial delivery, etc. And farm and ranch insurance is another part of commercial lines P&C. We are regulated by the states. Unlike banking or some other financial services products, insurance is regulated almost exclusively and entirely by the states. Each individual state has an insurance commissioner or some other insurance regulatory agency. In Oregon, it's the Department of Consumer and Business Services. A subdivision of that is the Division of Financial Regulation and the Insurance Commissioner. Until about a month ago, the Insurance Commissioner was Andrew Stolfi, excellent regulator, very smart, very innovative insurance commissioner, so good at his job that the governor took him out of it and put him over at the Department of Employment. So now we have a new insurance commissioner. Acting insurance commissioner is T.K. Keene, also a very knowledgeable, longtime administrator in that agency. So you'll see good continuity there in terms of the department's ability to not only regulate the insurance industry to make sure they're treating consumers fairly, but another key element that I think people may not be as aware of is that it's also the insurance commissioner's job to make sure the insurance industry is healthy and stable and competitive. Because insurance companies, after all, are private companies and they're competing with each other in the marketplace. So we like regulation because it keeps our competitors honest. That's a big part of it. So there is robust competition in most markets, with more than 100 insurance companies currently authorized to write homeowners insurance in Oregon, and more than 200 are authorized to write auto insurance. As I will discuss further, that doesn't mean all those companies are writing in every community, but there are more than 100 companies authorized, licensed to write insurance, homeowners insurance in the state of Oregon. Here are some basics about how insurance works, the big three things about insurance. So P&C insurance is the practice of predicting risk, pooling similar risks together, and charging a premium that aligns with similarly situated risks in the pool. I had a conversation yesterday with a reporter from the Bend Bulletin, nice fellow who had never heard the term actuarially sound before. Well, I like to put people to sleep with that phrase. Actuarially sound simply means you're making rating decisions that align with the risk that you're undertaking, so that you don't end up selling more policies for less money than it will take to pay for a disaster-sized claim. So that's what insurers have to do. The big three elements of providing and servicing P&C policies are underwriting, that's deciding who to write and what will be covered. Rating, that's what the policy will cost. And claims, and that of course means taking care of the policyholder to rebuild or replace a covered loss. Cancellation versus non-renewal. A lot of people like to throw cancellation around about that people are being canceled. Cancellations occur for a specific reason, like you didn't pay your premium or you've submitted a fraudulent claim. Or you can't pay for your premiums. That's about 83,000 of those occurred in Oregon in 2023, which is an increase, and it's likely due to people who are unable to pay for a dramatic increase in their premium, for example. And non-renewal is an insurer's decision to not renew a policy at the end of the policy term. And there were about 12,000 non-renewals in Oregon in 2023. Again, that's an increase over what's typically seen in Oregon, and that will come as no surprise to any of you who've been hearing about the insurance problems in the state of Oregon. And we'll talk a little bit about why that's occurring. The Oregon insurance property insurance market today, the average cost, again, this doesn't mean this is what you're paying or what your neighbors are paying. This is an average cost across the state for all homeowners policies in 2023, according to the National Association of Insurance Commissioners that collect this data, and according to DCBS that reports this data out, the average premium is $886 a year. According to bankrate.com, it's more like $1,000 a year. And these these figures are useful for comparison purposes. Again, it doesn't mean that's what you're paying or anyone you know is paying, but it's useful to note that Oregon's average premium is lower than all the states that surround you. And it's pretty dramatic compared to Montana, for example. So what that tells you is that even though rates have gone up pretty significantly, maybe 25% or more on an average across the state, and certainly individually, they have doubled for some people or more, that looking across the other states, it's sort of it could be worse situation. Oregon homeowners market trends, according to the DCBS and the NAIC for 2023, about 107 companies provided coverage for 1.6 million policyholders. It's actually more policies than were in force in the state in 2018. Fair plan enrollment, and this is an indicator, we got about rose 46% in 2024. What's the fair plan? The fair plan is Oregon's market of last resort for people who either cannot afford or cannot find insurance in the private insurance market. They can go to the Oregon Fair Plan. It's available for personal lines, homeowners insurance, as well as business insurance. It has somewhat lower limits than you might be able to find in the private market. However, it is, and those policies can be more affordable for some people, and they don't turn anyone away. The Fair Plan is backed by private insurance companies, so they have to take a share of those policies and insure those policies. And again, the enrollment in that plan rose 46% to 2,300 policies, which is somewhat alarming until you look at California, where they have 550,000 policies. But up here in Washington, they only have about 300 people in the Fair Plan in Washington. I suspect those numbers are going to go up as non-renewals and availability of insurance becomes a problem here as well. As you can see on the chart here, non-renewals increased 11% from 2018 to 2023, with the biggest jump between 2022 and 2023. That trend has continued into 2024, but we don't have the full year's data yet to compare and see how things are actually looking at through 2024. So let's move on. Here we go. Sorry. Oops, went too far. There we are. So some more basics. Here's what homeowners insurance covers. This is pretty easy to understand. Damage to or loss of your home and its contents from theft, fire, wind, or other covered peril. It doesn't cover things that it doesn't cover. So this is why I end every conversation with everyone. If you don't know what's in your insurance policy, please call your insurance company or your insurance agent and ask them to walk you through it. You should do that at least once annually anyway, but especially if you're not sure. And don't wait till after the disaster happens to reach out to your insurance agent, your insurance company. You really do need to know what your policy covers. Ask questions. If this happens, what happens? If the firefighting equipment that's putting out a fire down the street ends up doing something to a water line and the water line somehow backs up into my house, am I covered? If there's smoke damage, am I covered? These are questions. If a tree limb falls on my house, it's my neighbor's tree. Am I covered? Well, the answer is yes, you are, if you have homeowners insurance. But these are questions you really need to ask. You need to look at your deck page. That's the very basic explanation that comes with your insurance policy. You don't have to read the whole policy, but you should, at a minimum, read your deck page. That's short for declarations page. Sorry, sometimes I wander off into insurance lingo, and I hope you'll call me out on it at any point during the discussion if I lose you. It also covers the cost of living outside your home during repairs. It covers homeowners' liability for accidents and injuries to others. And I want to say that wildfire is always covered in Oregon. If you have homeowners insurance, it does not matter what started the fire unless you went out and started it yourself to commit insurance fraud. All other fires, whether they're wildfires, kitchen fires, grease fires, what have you, are covered under your homeowner's insurance policy. Renter's insurance covers the stuff inside your space, your apartment, your condo, your house. It does not cover damage to the house itself. Whoever owns that structure hopefully has insurance on that structure. It also provides limited liability coverage for the renter. for accidents and injuries to others. And a key thing about both homeowners and renters policies are if you have valuables in your vehicle or you're traveling on a trip and those things are stolen, lost, or damaged, as long as the amount you've lost exceeds your deductible, you can file a homeowner's or renter's claim to get compensated for your loss. It's not your auto insurance that pays if someone breaks in and steals your laptop. It's your not your homeowner's insurance. Sorry, it's not your auto insurance, it's your homeowner's insurance that covers that. So these policies don't cover flooding from outside the home. They don't cover earthquakes, although that coverage is available, and they don't cover earth movement, landslides, mud flow, and sinkholes. There is a caveat to that if, as we've seen recently, quite sadly, in Texas and New Mexico, if a flood occurs in an area where there has been a wildfire and it's determined that the flood would not have occurred except for the wildfire because of the loss of trees, vegetation to hold the water back, then oftentimes homeowners insurance will cover some or all of that loss. And I want to mention one other thing quickly on one of the other slides, and that is that as we are regulated by DCBS, DFR, that means that all the rates and forms, policy forms, before we put them in the marketplace, they are reviewed and approved by the insurance department in the state of Oregon. Similarly, in the state of Washington, we file rates with the department. Technically, Oregon's what we call a file and use state, which means we can file our policy forms and rates and just put them into the market. But insurance companies do not do that. They want to wait and make sure the department has reviewed them for actuarial soundness so that they don't get, a year and a half into charging a certain rate or having language in a policy, having the department find out about it and say, you can't do that and you have to give the money back. So insurers, to play it safe, they have their policy forms and rates filed with the insurance department before they ever go into the marketplace. Here are some factors that affect insurance costs, generally speaking. Natural disasters, what a surprise. Convective storms, wildfires, hurricanes. Convective storms are like tornadoes and hail storms and wind storms. They cost $168 billion in insured losses in 2023, $182 billion in 2024, and we'll see even larger losses, specifically starting with the California fires in 2025. The California fires alone are estimated to be close to $30 billion in insured losses. Costs for residential construction materials rose 27% in 2021. About 14% was the average in 2024. The CPI, the Consumer Price Index, is obviously much lower than that in the single digits. So these construction and repair costs, labor costs continue to be far above the Consumer Price Index. And that's impacting, claims costs are based in large part on what it costs to fix cars and replace homes. And if those costs are higher, then insurance costs are going to reflect that. And that's what we're seeing in the market now. I must also mention social inflation. That's the cost to settle or defend lawsuits against, not against insurance companies specifically, but against people that insurance companies have to defend. So if you have nuclear verdicts in the tens, hundreds of millions of dollars, or as we've seen recently, even over $1 billion for a single lawsuit, that pushes up the cost of insurance as well, because whether the insurance company is forced to settle these lawsuits in order to avoid higher costs that come with jury verdicts or simply the cost to defend, those costs also affect insurance. And as you see here on the slide, the average over a decade between 2010 and 2019 was 27.5% increasing year over year. That's not sustainable. That's going to obviously be reflected in higher costs for insurance. Then the lesser known issue for insurance companies is reinsurance. Reinsurance is, as noted here, insurance for insurance companies. Reinsurance companies are located typically outside the country. There are some insurers that have reinsurance companies themselves, but most of them are located in places like Bermuda, probably for tax reasons. And those reinsurance companies are massive amounts of money that insurers sign up for in case they have a natural disaster. So that when they reach a certain threshold of payout to their policyholders, reinsurance kicks in and either backfills the amount the insurers have paid out, or they pay directly out through the insurance company to the policyholder to keep the insurance company from becoming insolvent. There was a time, particularly from about 2020 to 2023, as we saw wildfires dramatically increase across the country, when reinsurance was extremely difficult to get, much like the problem that some homeowners in Oregon are having for insurance, except for insurance companies, and they were paying 50% more in premium for 50% less in coverage. So they had to patch together policies from various reinsurers in order to make sure they had enough backstop to pay claims in the event of a natural disaster. So for many years in Oregon and across the country, homeowners insurance rates were pretty stable. You look at this chart from 2012 to 2021, and you see with a couple of aberrations in 2012 and 2013 that insurance percent changes are in single digits and low, generally matching the rate of inflation or even a little lower. That's because there were not large-scale natural disasters and dramatic increases in the cost of repairing homes and vehicles. In 2020, which would have been reflective of what happened in 2019, premiums went up 3.1%. In 2021, they went up 7.6%, which was the largest, that's again on average, that's the largest increase in the decade. And then they really went up at a more dramatic clip after that. And here's why. If you look at the US wildfire risk, just wildfire risk, this is not other storms or hurricanes or other natural disasters, you can see that the insured losses went from 108 million in the 1980s to over 57 billion in the 2020s so far. We're obviously halfway through the 2020s. At the same time, those fire and other losses started to increase globally. Inflation went up, and the cost of replacing homes, structures, repairing vehicles, etc., dramatically increased. The chart on your left shows the increase in cat losses; those are catastrophes, and the chart on the right shows the corresponding increase in the cost of making repairs. That resulted in what you see here. This is a chart showing the combined ratio. That is the comparison of what insurers take in premium compared to what they pay out in claims. The chart on the left shows homeowners insurance. The chart on the right shows commercial multi-peril insurance. As you can see, there are 5 years, 6 years, 2, 6, almost 7, 7 years between 2017 and 2023 where insurers paid out more in claims than they took in premium, as high as 112% in homeowners, which means for every dollar they took in premium, they paid $1.12 in claims. That obviously is unsustainable, but it reflects the fact that insurers were behind the curve when it came to the dramatic cost increases that we saw coming out of the pandemic from 2019 through 2023 into 2024. Now, last month I was making this presentation to the Oregon Senate, and I noted, as you see below here, that the P&C industry reported its first underwriting profit in 2024. That's the first time since 2019, first time in 5 years. So now for 2024, on average, they paid out 99.7 cents for every dollar in premium earned. It's hopeful that that's a sign that the market is stabilizing, that the premium increases that people have had to endure have resulted in companies once again becoming profitable. And you think, well, that's great, now they can make obscene profits. Well, that remains to be seen. However, what it actually means is that when insurers become profitable, they once again start writing insurance because there's profit to be made. That's good news for consumers. It means insurance should become more available in places where it has not been available. And it means that in time, you'll start to see insurance companies doing what they've done up until we saw in 2021, which is competing for your business with prices that are more favorable. So at the same time this was happening nationally, look what happened in Oregon. Same deal, 1980s, 1990s, all the way to the 2010s, until we get to the 2020s, and in particular, of course, the Labor Day fires of 2020. But those losses, even after those fires, continue to be higher in Oregon than they were prior to 2020. And we've also seen increasing activity and around wind and thunderstorms and winter storms. As you can see, the winter storm there, the green bar shows a dramatic increase in that as well. So climate change, I guess it's real. 2018 to 2023, the percent change in premiums written. This is demonstrating what you all have seen personally, which is that premiums for property insurance were pretty stable leading up to 2020, and then they started going up exponentially in 2020 to where they are now. Again, this is average premium, not what you are necessarily paying for your property. So what are we doing about all this? House Bill 3272 in 2021. There are other bills listed here too. The Oregon legislature has undertaken a really significant effort to do a few things. One is improve resilience. Two is to better prepare communities and statewide firefighting forces to put out wildfires more quickly. And three, they have worked on legislation to improve consumer protection in the insurance space. Now, because I represent insurance companies, you may be surprised to learn that we are okay with a lot of these. Some of them we're less okay with. But the bottom line is that insurers have to work with public policymakers and do our best to inform what impacts there might be from legislation that is enacted. A lot of times when they'll hear us out, the legislation becomes, we think, better, not just for insurance companies, but because we work with consumers every day, we think those things can be better for consumers too. There's often, in my long experience, I've been working with the property casualty insurance industry since 1996. And I have seen a lot of legislative proposals and regulatory efforts come and go. And I can tell you this, the more prescriptive it is, the more difficult it becomes for insurers to remain competitive. So it's a great idea, for example, to do what they did in California. They said, one, you can't increase premiums unless it's approved by a commission of citizens. Two, you can't use any risk modeling to determine what your risk might actually be. Three, you can't use credit-based insurance scores to help people to help measure people's risk of loss. And four, we're going to mandate that you offer discounts to people who do Firewise or other mitigation efforts. And we're going to require that if you're going to write this kind of insurance, you have to write that kind of insurance. And we're going to put mandates in for what you have to cover, how much you have to pay out in certain things. And that was a great idea, except that now a lot of insurance companies have stopped writing insurance in California, and that's why they have 550,000, 500,000 people on their state fair plan, which risks collapse if they have another fire, really at any time. So we think we're always trying to persuade or influence legislators to say, let's do this smart, let's be smart, let's work together on things that will better inform consumers, to provide transparency about what's happening, and that protects the market and even improves and stabilizes the market, so that we are attracting insurers to stay here, to write more business, and to keep rates as stable as possible. So here's some bills I'll just run through quickly. House Bill 3272 in 2021 requires insurers to allow at least 2 years for rebuilding. This came in the wake of the 2020 Labor Day fires, when it was such a major catastrophe that it would take a long time to get lots cleared, to find builders to rebuild homes. And it would be more costly and take longer to get these things done. So the law now requires at least 2 years, and that can be extended in special cases. And it allows longer time payouts for additional living expenses if you have to live in another location while you're waiting for your home to be built. Importantly, it doesn't require insurers to pay more than the policy provides. If you've got a $500,000 insurance policy and it includes $100,000 for additional living expenses, when it runs out, it runs out. It doesn't continue to pay beyond what the policy limits are. But you can stretch it out longer as needed. And a lot of people, in most cases, the ALE, the additional living expenses, provides enough time for them to get a home rebuilt or get repairs made for them to move back into their home. In 2023, House Bill 2982 required insurers to pay 70% of your contents coverage without having to provide proof of loss. That means your whole house is burned down and the insurer is going to write you a check for 70% of whatever your contents coverage, which is usually a percentage of your homeowner's policy. And they just pay that up front. So you can start getting the stuff you need to put in to a rental home or your own home when it's rebuilt without having to provide like a detailed inventory. If you want 100% of what you lost in personal possessions, then the other 30% you need to provide a home inventory. So I'll just say while we're on the topic, one thing to do, if you haven't done it, go home today, get your smartphone out, shoot videos all around your house and talk about the things that are in your house, where they came from. If you know how much they cost, say it or write it down. The more information you can provide to your insurer after a conflagration occurs and you've lost everything, because you won't remember, and it will be painstaking to do it if you haven't done it ahead of time. That, by the way, that is limited to occasions where the wildfire is declared an emergency. But already this year, there have been, I think, 5 invocations of the the Conflagration Act by the governor. So clearly, when there are fires, there's going to be a declared state emergency. Senate Bill 82 required insurers to disclose additional information to policyholders about non-renewals or premium increases related to wildfire risk. Basically, what that means is if an insurer, every insurer must tell the policyholder and the insurance department if they recognize mitigation efforts. And if they do, how do they recognize them? Is there a guaranteed renewal? Is there a premium discount? Is there any other kind of favorable treatment? They have to disclose that to the policyholders. They have to disclose it on their public-facing websites. They have to include information about it. It's probably on your deck page. If you haven't read your deck page, take a look. And it, of course, banned the use of state-created risk or hazard maps by insurance companies. I need to tell you, I've said it 100 times since in the last 3 years, insurance companies have never used the state's risk map or hazard map. And of course, now with the passage of Senate Bill 83, the hazard map is gone. It doesn't exist anymore, but we never used it. We have our own risk modeling tools that have been in use for many years. They may or may not be perfect, but they're better than the one that the state put in place, and we never used it. So Senate Bill 83 and 85 this year, as I mentioned, repealed the hazard map. And Senate Bill 85 establishes an insurance industry informed study that will be conducted by DCBS, the State Fire Marshal, and the Department of Forestry to make recommendations to the legislature on how to improve the insurance market through parcel level and community resilience. Now, I think what this means to the policymakers is how can we get insurance companies to give people discounts? I think that's what that boils down to. And we're going to be a part of that study to figure out if there's a reliable way to do that. But I want to go back to something I said earlier about actuarial soundness. I'm going to talk in a moment about the Wildfire Prepared Home Program, and it's kind of the next step that goes along with, builds upon the foundation that all of you are familiar with in FireWise. It's a new program that's been developed through fire science. that has been developed by the Insurance Institute for Business and Home Safety. And it's the first time there's a standard that's actually recognized by insurers as being a certification that your home is less likely to be lost or damaged significantly by a wildfire. Well, that's great. And it's rolled out in California. There are entire communities that are being built to that standard, but wildfire prepared home has not saved a single house yet. So as we start rolling these programs out and people are asked to consider retrofitting their existing homes or building new homes using the wildfire prepared standard, they will of course ask, great, does this guarantee I'll have insurance and will I get a discount? And the answer is, we don't know. Because no homes have been saved, and insurance is priced on predictions of what will happen that are based not only on catastrophe modeling, but also on what we're already paying out. As I mentioned before, California had a $30 billion loss last year. Now, we don't import losses from one state to another. So Oregon premiums are based on Oregon insurance companies' Oregon experience. So we need to see actuarial evidence that these things are working and that we're reducing losses and we're paying less in claims. That's when you see improved competition, lower prices, discounts, guaranteed renewal by insurance companies, that sort of thing, is in a market where there's competition. So I'm sure you'll have some questions about that, so I'll move on. Finally, I want to mention, because I was a member of the Fire 35, this is a group of 35 organizations that came together to develop recommendations to the legislature to provide an ongoing sustainable revenue stream for landscape resilience, community risk reduction, property mitigation, and large wildfire response and suppression. We did provide several recommendations to the legislature. Most of them were cast aside this session, but it started a great discussion. One of the recommendations was to take some of the state's existing rainy day fund, put it in an account, and help build a fund from the interest bearing from that account, and combine it with taxes on nicotine products, non-smoking oral nicotine products. The one everyone's familiar with is Zyn, but there may be others. And that's going to create what's anticipated to be a $68 million biennial revenue stream. And that's been dedicated specifically to landscape resilience, community risk reduction, property mitigation. So next steps will be in the area of property mitigation through the Office of State Fire Marshal and the Department of Forestry, and through organizations like Firewise, as we reach, and the Fire Adapted Communities programs, to start reaching out to communities and doing that work. So as I mentioned, the IBHS Wildfire Prepared Home Program, you can find that at, I think it's wildfireprepared.org. You can learn all about what that program is. The picture you see in the lower right is a burn demonstration we did in Salem, the IBHS did in partnership with the State Fire Marshal's Office. The home on the structure on your right has been wildfire prepared, which means it had 5 feet of defensible space in front of it. It does not have a wooden fence leading up to it. It has plants that are fire resistant planted in front of it. It has metal furniture and not wood furniture. It does not have firewood stacked next to it like the place on your left. And the other one is a more traditional, what you'd see in homes built through the 1980s throughout the West. It took a while to get that fire started because, as you can see, it was a cool, damp day. But once they got the fire started, it did what it always does, which is burn the home that is not wildfire prepared and leave the other structure completely unharmed. So that's why we have hope that this program will help homeowners, property owners, policyholders across the West. And a couple of months ago, we were all in Salem for the signing of a memorandum of understanding between the State Fire Marshal and IBHS to promote and work together on establishing wildfire prepared homes and wildfire prepared communities across Oregon. And we hope that's going to lead to more collaboration between insurers and firefighting agencies. But what's really needed here is even more outreach and collaboration among firefighting agencies, insurers, organizations like the ones that you are leading, community leaders, builders, lenders, realtors, all have a stake in this as we go forward and try to improve resilience. I will say that we have asked legislators to first do no harm to the Oregon market, and so far Oregon has taken a very thoughtful approach. As an example, Oregon Senate Bill 82 requires transparency. It requires insurers to provide information to policyholders, but it doesn't mandate how we underwrite insurance, and it doesn't mandate that we set a specific rate. As long as rates are actuarially sound, which means they are not excessive, inadequate, or unfairly discriminatory, they're going to approve rates as needed to keep the insurance industry solvent, to keep companies solvent and competitive. And we have also on the other side there, focus on structural resilience, focus on parcel level mitigation, focus on grant funding, improve and encourage the use of wildfire prepared home, and continue to allow and encourage insurers to offer discounts, but don't mandate it. Make it easy for them to do it, and they will do it when the market is competitive. So that, I think, wraps up a bit longer than I intended to go, but hopefully I provided some good basic information for you. I will stop sharing and see if I can answer any questions.
I'm with the Homeowners Association here in Bend. I want to thank you. If you would maybe clarify something you said on the next to last slide. You said wildlife preparation has not saved a single house yet. We were talking about in reference to California. Is that what you said?
I said the wildfire prepared home program specifically has not saved a single home because it's brand new.
So does that mean that what we're doing here in Deschutes County, both the county, all these amazing efforts that they're doing to do mitigation out in the forests and in the forested areas, and what we're doing is homeowner associations, is in your mind has had no effect?
No, not at all. I certainly wouldn't want to be heard saying that. In fact, Firewise communities and efforts by homeowners associations are making an enormous difference. And if there are communities in Oregon that aren't doing any of that work, they're in worse shape than you all are in Central Oregon because of the work that you are doing. I know that it looks like it's a crisis, but it's not as much of a crisis as it is a momentary set of difficulties that have combined to make insurance difficult to find and expensive. It's our hope that work like the work that you're doing continues and improves in order to build more confidence among insurers. One of the things I've heard a lot is it's about, from the insurance industry perspective, it's about their perception of risk. It isn't actually that blind. Insurance companies do a lot of work in catastrophe modeling that involves everything from satellite imagery to soil science to topography to slope and all those things. And it's more complex than I even understand myself. But a big part of it, though, let me back up and give you an example. A good friend of mine, I was this weekend visiting a friend who lives in Central Washington, which is another place where it's very difficult to get insurance. A lot of trees, a lot of dry, hot summers. There have been fires, and this fellow found out that his insurance would not be renewed, so he had to go shopping for insurance. He thought he had insurance locked down, and the day before, like he was arranging payment, right? And it was Friday afternoon. The other policy was going to lapse on Monday, so he wanted to make sure everything was taken care of. The insurance company, the agent, I should say, the broker, contacted my friend and said, yeah, the insurance company just found out there's a fire burning in the Glacier Peak area near your home, and they won't write any policies right now until that fire is contained. Well, the fire is, it might be 50 miles from his house, and it's in a wilderness area on the other side of a mountain. And it's not going to be contained anytime soon because all they're doing is watching it for the time being, because there's no homes. It's in the national forest wilderness and is not an immediate threat to go anywhere because it's deep in a ravine. So he had to explain that to them. They still wouldn't do it, but he found coverage from another company by calling around for an hour. So Anyway, to answer your question, the answer is, insurance companies recognize the work that communities are doing. I can tell you that if you weren't doing that work, insurance would be almost impossible to get where you are.
So my last follow on that is, I'm really not sure you answered the question. It felt like you were uncomfortable, just all with due respect, we're not in the same room. But that you felt uncomfortable answering that, because the other thing you were kind of implying is that if we don't regulate you, then you're either gonna get out of here and sorry, we're gonna pull the nuclear and we're not gonna do it. Or the best happens is that people are gonna run into Deschutes County and run into these communities that are doing all this effort because they're gonna want to insure us because we're a good risk. And you're saying, please don't regulate us because we'll do that, and yet you're not doing that. So I guess that last part wasn't the question as much as the first two were. It's real hard for me to trust what you're saying, that insurance companies are gonna reward Deschutes County for things like this. I feel more like we're being punished for the fact that there are other counties here that are not doing what we're doing. And therefore you say, well, look at all the money we're spending on these other fires. And I think we'd all like to be able to go back to our constituents and say, you're gonna be rewarded by insurance companies for what you're doing. But I couldn't do that after what you've said. And again, not to be argumentative, but I just want you to have that feedback. So thank you.
Well, I appreciate that because that means I haven't explained this very well, and that's good for me to hear. I am trying to say that the work that's being done is helpful and useful, and insurance companies do recognize it. And the picture I've tried to paint for you is that we're at a moment in time when insurers have seen dramatic increases in the cost of paying claims, and that's why premiums have gone up, and that's why insurers have chosen to reduce their risk in certain areas of Western states. As insurance companies have a decision to make when they see increases in losses, increases in claims payouts due to wildfire. They can't just pay as many claims as there are and charge the same rate and keep writing insurance to the same number of people or write more people. They can't do that. That math doesn't work. So they have to raise premiums and reduce their risk. Different companies have different appetites for how much risk they can take on. And if one company decides it's going to write 10% fewer homes in Central Oregon, then that puts pressure on the companies that are still writing and increases their exposure to risk. So they tend to say, well, we're going to decrease our risk profile in that area as well because we can't afford to take on the people that the other insurer has left. That's just the economics of how insurance works. What I'm trying to suggest is that as helpful as Firewise and the work you're doing is, there are things that are beyond our control, which is inflationary costs and the damage that's already being done by wildfire. What you've seen in Oregon and other Western states is insurers reducing their risk in order to remain solvent so they can serve the policyholders that are still there. And they have increased premiums in order to catch up with losses they have suffered over the last 5 years. My hope is that as more of this work continues in Oregon and insurers have now sort of caught up, it appears, with what they needed to become financially stable, they will start to write more policies and you'll see changes in premium. What I'm suggesting about regulation is regulation plays an important role, but if you say to private companies, we're going to make it difficult for you to write insurance here by imposing mandates and requiring certain coverages and enforcing discounts that are arbitrary, then insurance companies are going to take a long, hard look at Oregon, which is not a massive market, and say, do we want to remain in a market where we are going to lose money? And that's just, again, that's just an economic reality. My hope is that that's not where Oregon's headed, and that's what all this public policy work is for, to prevent that kind of thing from happening in its collaborative regulatory structure, not imposing mandate structure.
So I'd like us to step back just a little bit with respect to your question. I appreciate your perspective. But I think the first and foremost, what we're trying to do when we do Firewise mitigation around our properties is to improve the survivability of those homes. I mean, that's first and foremost what we're doing. And then to also recognize that by doing that type of work, by hopefully being prepared and preventing wildfire catastrophes, we're actually protecting our natural resources, our ecosystem, we're protecting the livability of our community, because if fire happens here, we will have a hazmat situation. And things won't look very, attractive. With respect to insurance brokers in this area, I have talked to several, and what they tell me is that by doing Firewise work, you actually are, insurance companies look at that favorably, and it might make your policyholders more eligible for coverage. So they're more likely to get coverage. It not necessarily means that you will get a discount, but there are companies that provide discounts for Firewise mitigation and so forth. And so Kenton, coming back to you, my question is, can you identify for us insurance companies that do offer discounts for Firewise work? The only one that I'm familiar with is USAA, but I have been told that, a handful of companies, possibly up to 5, offer insurance discounts for Firewise communities. It's very cumbersome to reach out to each company and ask if they provide an insurance discount. That's work that I can't take on.
Understandable. That's all I work for anyone. I don't have that information, and part of the reason is why is because I work for a trade association, and there are very specific things that I'm not allowed to know about individual company practices. So I don't know the answer to that. I am familiar with the USAAs because they're one of the founding insurers that work with Firewise from the get-go. My recommendation would be it's likely that the Division of Financial Regulation, which I know has an ongoing, I think, sort of live list of companies that are writing coverage in Oregon or are authorized to write on their website. They may also have information about which of those companies provide Firewise discount.
I've asked and they don't know.
They don't know.
No.
Huh. I'm a little surprised by that because again, where companies are required to tell the department
Well, maybe I didn't
how
ask
they
the right
recognize
person.
mitigation. So I'm a little surprised to hear that, but I'll ask them about it.
Okay.
And we'll see if we can find a way to identify those companies for you.
If you could ask, that would be great, and circle back to us. Perhaps I didn't ask the right person at high enough level.
Yeah, it's hard to imagine. It probably just means that they have not done the same thing that the rest of us have not done, which is actually contact each of those companies or look at their filings to see which ones offer a discount. But it's certainly information they could get pretty readily. So let me add, we have a meeting with the department once a month. Why don't I raise that with them and ask how the industry could collaborate with them to identify the companies that are offering discounts to provide that to the public.
That would be great. Thank you.
Sure.
And then there's a couple online that we skipped. I just want to make sure they get a chance. Mitch, did you want to unmute yourself and ask your question? Or Ariel?
Hi there, this is Ariel Cowan. I'm with Oregon State University Extension as a regional fire specialist. Thank you for your presentation. I was just wondering if there's regulations on mergers and acquisitions, and if that would even have to be at the national level, because a lot of these companies.
There are
And
regulations.
if the state could even have any effect on that.
Oh, yes. Yeah, the answer is yes. The states regulate all aspects of insurance, including mergers and acquisitions. I don't know that they so much approve, like you hear about, the Federal Trade Commission probably regulates mergers and acquisitions on that large scale, but state insurance regulators regulate probably more the outcome. So there are regulations in place. Like if there were two massive insurance companies that were going to merge, I'm pretty sure the Federal Trade Commission would review the result of that merger.
Yeah, it just feels like I hear about these regulations and then you hear about merger happening anyway. So it just, that's clearly affecting then the competition that you were speaking about. So it sound like there needs to be advocating for that on a beyond state level.
It's probably a fair point, but I again want to point out the problem isn't so much that there aren't enough insurance companies. There are literally 100 insurance companies or more licensed to write in Oregon. The issue is why won't they write more insurance? And the answer is because they're losing money on the insurance that they're writing. So resilience is the answer, and that's the very work that you're all engaged in, and it's the very work that insurance companies want to support. That's why we're engaged in the wildfire science space. That's why we're engaged with regulators and legislators to improve resilience, helping communities do what you're helping them do, learn to live with wildfire.
And we do some of that. I do that in collaboration with Oregon State Fire Marshal and local fire departments and other local entities with offering workshops on wildfire home protection strategies. And we recently thought about trying to cater customize some of those workshops towards underwriters. And I'm not sure, would you say that would even be beneficial, or that wouldn't even matter whether the underwriters have a greater understanding of what factors go into actually helping to improve risk factor and hazards for a home?
I think that would absolutely be helpful. I think that underwriters, because insurance companies are private companies and they're in competition with each other, they have their own, individual reasons for how much risk they want to take, where they see the ability for their companies to grow. And that is reflected in that gets pushed out to the underwriters. And they say, here's our bottom line. Here's the kind of business we're trying to run. The underwriting has to match that in order to help us grow and be a profitable company. Those underwriters, though, can be better informed by information. And that's why companies use catastrophe modeling, risk modeling that are provided by vendors. That doesn't always mean those things are exactly accurate and right. And I'm strongly encouraging companies to engage with those vendors and also do their own research, whether it's on a large scale, like maybe what you're suggesting, or on the individual property level. We hear a lot from people, well, your aerial photography or your satellite imagery looks like this, but if you came and looked at my property, you would see I've done all this defensible space work. That's a reasonable complaint. And I think the next area of state regulation is going to have to move into transparency around what these wildfire risk scores are, how they're formed, how they're created, what science goes into them, and whether or not they are as accurate, less accurate, or whatever than boots on the ground, walking properties. One of the benefits of the Wildfire Prepared Home program that insurers like is that it will be verified. There will be people, coming out either annually or once every 3 years or something to inspect the properties to make sure they're still certified, that the brush hasn't overgrown places where it was cleared before, or that they haven't decided to restack the firewood next to the house, or what have you. That's part of why this program, it shows promise as far as insurers are concerned. And I don't think there's ever any reason to have less information going to insurance companies, whether it's from science, from vendors, from universities, or from local communities.
I just wanted to thank you for your presentation. It was very informative. Can you share that with us? Can we get that presentation?
Yeah, absolutely.
Yeah, Kenton, if you could just email that to me, this is Corinne, you can email it to me and I can share it with the group.
That'd be great.
Sure.
Thank you.
Looks like Raymond has a question.
Oh, yeah, we have one more in the room and then Ray.
Hey, Ken, my name is Zachary Price, and we, in addition to doing home improvement services, we also do home fire hardening services, improve fence gutters, things like that. So if I heard you right, in doing this, I talked to a number of different insurance companies, and they each have different profile risk maps that can go house by house, block by block. So what I heard you say is that you encourage that information to be made transparent and public, because I think that would really serve homeowners. If they could look and they would know which insurance companies would cover them based upon the risk of their home without them having to call 10 or 20 different locations. Do you support legislation that would require that information to be made public to homeowners so they can find the insurance companies that would cover them at one look, and they can see what the risk is, and they can see the risk of their neighborhoods changing over time as mitigation efforts are made?
So that's a little bit of a tricky question, because first of all, I'd have to ask my members if they'd support it. So I can't say that I'd support it right now, but I can also say that one of the critical things that we always have to wrestle with when we're talking about regulation of the insurance industry around transparency in particular is how do we provide information to the public that's useful without exposing companies' trade secrets? Like if one company has the secret sauce that helps them kill it in the marketplace, and you make that available to their competitors in order to make it available to the public, then that's unfair trade competition issue. So I don't want to sound like that's hopeless and there's no way to do it. Maybe there is. I think it's more about providing information that's somewhat generalized that help people understand what goes into a risk score than it is to provide. I mean, if you are with an insurance company, let me give you an example of something that could work. If you're with an insurance company and they're using a wildfire risk score, I know the day is coming, if it isn't here already, when legislation or regulation will require the company to tell the insured what's in that risk score, particularly if they take an underwriting action that's negative. We're going to non-renew your policy. It's because you have a wildfire risk score of 7 or whatever. And so then the person can say, I need to know what's in that risk score and why you gave you that risk score. What's difficult is saying company A's risk score is 7, company B's risk score is 4, and how they develop their risk scores are different. And we want you to share all that with the public so that your competitors all know how you're developing your risk scores. That's the tricky part. So I can tell you that insurers would definitely oppose something that requires them to expose their secret sauce information to their competitors. But that doesn't mean there isn't a way for people to find out in their own individual circumstance what their risk score is currently.
Ray, you had your hand up?
Yeah, thank you very much. This is a great presentation. Appreciate it a lot. Looking at the IBHS criteria for certification, the basic level and then the base plus level, even at the base level, there are certain things that are almost financially prohibitive for homeowners in the rural areas. Especially those like us in Woodside Ranch who live right near where we live in the forest, essentially. It's pine, and which keeps growing. And one of the things we looked at, and I've had complaints from the neighbors, is it's going to be almost taking out 90% of their trees in order to have a 10-foot separation, limb to limb, on these massive ponderosas. At that point, it's too expensive. And how can they ever achieve this without actually going to near, financial catastrophe for themselves in order to satisfy an insurance company that may or may not give them credits and reductions on their premium or even renew it the year after? Because if they come out and look and say, well, these trees have grown tremendously, we're not going to renew you. What is that going to do in terms of the IBHS criteria? Some of them just are not feasible in a rural area.
I would be thoughtful about how to answer your question. I am certainly aware, and there are a couple of things I want to say about this, and I don't want to sound flip or glib, but this is part of the problem with the discount discussion. A person can go spend $50,000 or more on replacing a shake roof with a composite roof, and they're going to get what, a 10% discount on their insurance policy? How much is that going to be? The math on that ain't great either. So, but to answer your question more specifically, that is why we're very interested in seeing more work done with our industry and with the state to develop mitigation grants. Mitigation grants can work. They have been proven in other states on other natural disaster issues. I'll give you an example. A recent study done by the University of Alabama on the results of a mitigation grant program that helped people replace their roofs with what's called the fortified roof, which is another scientific development from the Insurance Institute for Business and Home Safety. The IBHS fortified roof program actually proved itself in a hurricane, Hurricane Sally, I think it was a few years ago. And it came as a result of a lot of homeowners getting grants from the state to replace their roofs or get help replacing their roofs in some cases. When the storm blew through, a bunch of houses were saved, roofs were saved, they didn't blow off. So, and insurers have responded by giving discounts to those properties in that area because they've seen the risk go down. So I know for a fact that these things work. And I know that mitigation grants are a key part of that effort to help people who simply can't afford to do a major replacement. Now, I also want to say that not all of the things that are in the wildfire, if you want to be certified, of course, they want you to do all the things. It's a system of things, actions that homeowners can take. But as you well know, at a minimum, if you get the ignition zone protected, that 5 feet of defensible space, and you do a few other things, then you're going to be in much better shape to preserve your home. And increasingly, we'll see as more homes are protected, again, it builds insurer confidence, more insurers stay in the market, other insurers join the market. We just, these are all things that all work together to improve the market. But I think the fortified roof program demonstrates that if you combine science and you assist people to do the work with mitigation grants, and then you see a reduction in loss, the insurance industry does respond favorably.
Who's doing the mitigation grants?
Oh, the problem has been that we have people here, we've been doing defensible space for like over 15 years now. And we know home hardening and the first 5 feet are the most critical. People have done that. Now the insurance companies are coming back to them and saying, well, let's look out 60 feet. And we say things we'd like you to do, which really have to do with the large trees. They've taken care of ladder fields, ground fields, all of that stuff. But the insurance companies are saying, well, we're not going to renew you. It's not that we're going to increase your premiums, but we're just not going to renew you unless you do these things. And even then, there's no guarantee that we're going to renew you. People have gone out, looked for other insurance companies. In one case, they actually found one that charged them less. But in a lot of cases, it's been over twice the premium in order to insure a property, which we know is much more fire resistant than if they had not done this home hardening and the first 5 feet, even out to 30 feet. The insurance companies seem to be holding them, saying, well, unless you do 100% of all of this, you're a risk to us.
Yeah, and I'll just say, I think that's a reflection of the moment that we're in. I don't think it's going to stay that way, but I think that what we've seen is insurance companies are terrified that another major fire will wipe them out. So some companies have a better understanding of the Oregon insurance market and fire risk than other companies do. And those are the companies that will still write coverage and in some cases provide insurance for less than what the homeowner was paying before. But there are, as I said, there's 100 companies out there, but maybe there's 2 that are going to write in a specific area or county or neighborhood, or maybe there's none, and maybe you have to go to the specialty lines market depending on where you are. I understand that this is tremendously frustrating, and I hear it everywhere I go in all 3 of my states. I'm certainly aware of it, and I don't want to be unsympathetic to that concern. I think that what I'm trying to say is, Insurance is, can be extremely difficult to get, and it can be very expensive at this moment. It's our hope that as the market begins to improve and recover from the losses it has been taking over the last 5 years, some of those problems will be eased. It's not that way at this moment, but I think it's already better than it was a year ago. And hopefully, I mean, there's 72 fires active in Oregon right now. An insurance company based in New York doesn't necessarily understand that that isn't exactly where you are, and they're just looking at the potential of risk. As they see that risk improve, then they will come back to the market.
All right, we have time for one more question. Melissa's had her hand up for a while, so I'm gonna let Melissa have the last question.
Hi, Kenton. My name is Melissa Steele. I'm a fire inspector with Bend Fire and Rescue. Thank you so much for your presentation. I just have a couple questions for you. So here in the city of Bend in our rural fire district, I created and helped manage our wildfire risk assessment program. There has been so much good work, all of these people. My question is, you're saying that you can't measure fires that don't happen. I've been in prevention a very long time. I completely understand. We cannot measure success if a fire doesn't come through and wipe a whole bunch of people out. My question is, when are insurance companies going to start looking or trusting local fire departments, state fire marshal for doing these assessments, completing all this work, teaching these courses, having whole communities now have actual trained assessors to assess their own communities? When are insurance companies going to accept that type of work? Because I love that IBHS is now partnered with Office of State Fire Marshal. That's 100% excellent. That's going to take time. We're trying to prevent right now the big one coming tomorrow, right? We're talking about two different things. We're talking about actual fire on the ground, urban wildfire running through a community, and the work that these people have done versus insurance and what someone from an aerial view at a computer sees and says you have a tree within 30 feet, uninsurable, or, we're not going to renew you. They could basically pave or, clear their entire property and you guys wouldn't insure, not you guys, but you know what I mean. They wouldn't be insured. However, on the ground, realistically, fire behavior wise, they've done everything correct. So my question is, does that look like that's coming down where insurance companies are going to say, oh, you had an assessment by Bend Fire and Rescue or State Fire Marshal, and absolutely, let's submit that, and now you will be renewed, at least renewed. We can work on discounts later. That's baby steps, but that's my question.
It's important, I guess, for me to first say, first, thanks for your question and thanks for the work that you do. I've loved my collaboration with Mariana Rees Temple and the Fire Marshal's office, and really, I mean, she's the one that kind of got me into all this work in Oregon, so I'm really excited about the work that's being done there. I think increasingly insurers have to find a way to coordinate the work that they are doing in terms of CAT modeling, the information they're receiving, as you say, from satellite imagery and aerial imagery, et cetera. And it's not just those imagery, it's also soil science and topography and all the other things. But they have to combine it with the work that you're doing. And there has to be a better back and forth communication between organizations like the State Fire Marshals, IBHS, and then out to the insurance companies. I don't know that there's a conduit for that right now, because even as we're having this discussion, the way you're framing questions is always like, insurance companies do this, insurance companies do that. Insurance companies are individual companies, and they don't do anything as a group. They're all competing with each other, and they're making their own decisions about how they're going to respond to risk, how they're going to run their companies, what kind of insurance they want to write, and who they want to sell it to. That's 100 different companies from all over the country who are making those decisions. So it's difficult for me to say what insurance companies will do, because there's a whole bunch of them and they're all making their own decisions that I don't know anything about. I can't know anything about. But what I can say is what we need to do is this is a really great meeting. I'm glad to provide you with some information, but I'm also super happy to hear the feedback that I'm hearing in Bend as well as other places in the states where I work, because insurance companies need to hear this. They need to know that that people are not just frustrated and scared about their own insurance. They're frustrated and annoyed that they're doing all this work and the companies don't seem to recognize it. I think some companies do, and some companies don't. And some companies do recognize it, but they can't do anything about it because they're losing money. So they have to figure out how to remain solvent and profitable in order to continue to write insurance. And that's a part of the picture that you and I can't fully see and understand. But I hope we can at least appreciate that what insurance companies, what they want to do is sell insurance to people. They don't want to non-renew people. They don't want to cancel people. They don't want to not write new policies. They make money when they sell insurance. They want to sell more insurance, but they can't sell it when they're paying out $1.12 in claims for every dollar they take in premium. That's just simple math. And that I hope that the information you provided to me, I can find a way to continue the discussions with our companies and with IBHS to figure out how do we improve this information for consumers? How do we tell them about mitigations that matter, and how do we let them inform their insurer about those mitigations that they're undertaking? I have heard stories about people who've said, look, come to my property and look at it and tell me that you can't insure me. In some cases, that actually works. Not always, but in some cases that actually works. And I encourage you to keep doing that as well.
And that meeting needs to happen with a fire department representative as well, because that's where the gap is. What actual like risk mitigations that work 100% of the time versus what they're saying. That's the gap. So that's just why we're trying to fill that gap a little bit of, yes, let's have them come out and do it with an NFPA, then Office of State Fire Marshal person. So we're actually assessing the same things. Thank you very much.
Can he give us his email again?
Was that on the slide?
Yeah, it was.
Okay.
Your email again, so that if there's information that you will pass on to your members, that we can send it your way to then give to them. I would say though, they're all going to AI right now and reducing their customer service. I'm shocked to hear that any of them actually go to someone's property. But everybody's smiling in here and laughing. But
I only have
you
2
have
minutes left in the meeting.
Okay.
If you can share that slide. I need you. Actually put it in the chat.
We can get
Yeah,
that.
I mean,
I'll get that to you.
I was literally at a house of the guy I mentioned before who was trying to get his insurance. He did locate and get a policy bound, and they immediately sent a guy out to inspect his property. So I've seen it with my own eyes.
Insurance brokers here.
All right,
probably
thank you,
have set that
Ken,
up.
so much taking the time
They
to
send the-
present
I
to
do
us
too.
today
Send
and
them their own.
this discussion. Appreciate the time.
My pleasure. Thanks for having me. Anytime.
All right, I know we only have a couple minutes. If there's anything pressing, what's an announcement, we can make it really quick. It's roundtable stuff.
Just really quick, I just want to mention, we have increased our meteorologists have developed a kind of a new modeling and stuff, so we've increased our enhanced safety settings, so you will be seeing within the Bend Proper area as well, more outages due to any kind of disruptions and stuff. So remember, that is for enhanced safety settings. It is for wildfire prevention. And so, be patient with us while it takes a little bit longer to get that, the power back on. It is for prevention services. So.
Thank you.
On August 9th, the Central Oregon Master Gardeners Association and City of Bend will have an open garden at the Holland's Head Waterwise and community gardens. We are setting up a table about firewise and fire mitigation. So if anybody would like to join me in helping answer questions from the public about fire mitigation and steps that they can take, that will be held August 9th from 9 to 12 at the Holland's Head Waterwise Garden. So shoot me a message, churchrhm@gmail.com, if you can help me out. Thank you.
Red Cross, I just wanted to mention, we were full swing in fire season. We've had 5 different shelter openings due to evacuations everywhere between the Dalles and Klamath Falls, and we currently have a shelter open in Madras.
Yeah, thank you for your work. Yeah. All right, Dean, we're at 9:30. The meeting quit.
Keep this brief. Previous
president of the UDRC, Carl Jansen. I just wanted, and he was active in Project Wildfire for many years, the early years. Some of you maybe, but his daughter gave a call this week saying he passed away last month. I had called over there because there was a fire like within a block of his home, and I was just checking in. I left a message. She called back, and I guess there's going to be some kind of memorial later on, maybe even in September or anyone that might.
You want to shoot me an email about that?
Yeah, he's the one that got me to come to Project Wildfire.
Yeah.
He started the UDRC.
Yeah, I've talked with Carl a few times. Yeah. I can go on to his you get the information, send it to me email.
Yeah, when I get the information, I'll pass it on.
All right, thank you, everyone. Sorry, the discussion went long. I kind of figured that was gonna happen. Topic, but yeah.
Thank you.
Yeah.
What care?